companies need to borrow money very often to expand. People need to get access to more money to expand their personal wealth. So when interest rates are low, of course, you can borrow money more easily. And that's the very first and most important factor. What did Bernanke say about a month ago about interest rates? He said he's going to keep them low for a while. Yes, they're very low, but the intention right now is to keep them low until 2014. What does that mean? Very good prospects for at least the next couple of years for interest rates remaining very low. Slow growth. The market loves slow growth. You know, everybody says, oh, oil prices are going up, or the housing market's not doing so well, housing starts aren't as strong as they should, jobs haven't been as strong as they could. All of that, in a way, is good news because it keeps the economy from going up too fast. Because if it goes up too fast, it's going to squelch growth because of inflation. The big I word is something that the market hates. So a slow growth economy is exactly what we want. Value relative to other investments. If owning a stock looks like a better investment than a CD, then it's going to go up because money are like little workers that want to be put to work. So if you can make 2.5% dividend from General Electric, 3.5% right now actually, and you make 0.5% on your CD with U.S. Bank down the road, who do you think has more money, U.S. Bank or General Electric? General Electric could buy 100 U.S. banks, right? They pay 2.5%. Now there's more risk because that CD is guaranteed. But as far as an investment is concerned, the little soldiers are going to run to GE because they're getting 2.5% versus 0.5%. Okay? So the other thing is good prospects for the future. So the market always looks ahead. It looks ahead at least 6 months. So we always have to be looking for the future. If the market had already run up to 20,000, tonight I would be giving you an entirely different presentation. But because we are looking at the same level as we were looking at in 2000, we are really in a good situation. We missed a whole decade worth of growth in the market. Do you know that? From the year 2000 to 2010 was a very, very rare event. The market did not go up for 10 years. We are at a place where that market is ready to catch up. Every day I watch it and I think, don't go up yet, don't go up yet, don't go up yet. Why? We want to get the money in there before it goes up to 20,000. And people usually look back. I have a lot of job security because one of the things that people have a tendency to do is the wrong thing. Okay? When the market starts to fall, they want to sell. And when the market starts to go up or continues to go up, they want to buy. People are always late to the bandwagon. It's already gone up 5,000 points. Okay, it's going up, let's buy. No, 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 that's not the time to buy. The time to buy is when everybody's sitting around saying, well, you better wait. Let's wait and watch. That's the time to buy. And my job security comes in just having common sense and convincing my clients this is the time to buy. Even though things might not look so bright to you, this is the time to buy. And when the market goes up to 20,000, which I have every confidence it will, that may be the time to sell. But we may wait till 30. You know, we might. because we don't know how big this expansion is going to be. How big can this expansion be? Let's think about that. We are at the beginning of an international expansion that is going to be like nothing anybody has ever seen in the history of the world. We're all communicating now. We're all connected. Everything is just starting to grow. This market, we have moved from 800 or 700 back in 1983, 2012, 13,000, without the rest of the world. What's happening out there? We have 350 million people in the United States. How many people are in China? 1.4 billion. China alone. India, 700 million. Put the two of them together, that's 7 times the number of people that we have in this country, 6 times. What makes an economy move? People. The most valuable commodity any country has is its people. The other thing we have is lots of money moving around. That's one of the things that makes the market move. Lots of money moving around. Do we have that? We have it. Corporations right now have $3.7 trillion on their balance sheet. 3.7 trillion. How many zeros is that? You know, a billion has 9 zeros, so trillion has 12 zeros. That is a lot of money. 3.7 trillion cash on their balance sheet. In the last year, corporations have bought back $1 trillion worth of their own stock. They're sitting there with money. There is so much money that it is just overflowing and looking for a place to go. GDP. Here's a chart of GDP. This is from 1960 until 2009 or 2008, and it shows what happens, how people create wealth and what happens as we go along. You know, everybody's worried about the economies caving in on themselves or something, but in reality, we're growing quite a bit. So let's look at some economic indicators. I always watch the economic indicators. I'm a fundamental analyst. I'm not an analyst, but I do a lot of analysis. And I follow all the fundamental analysts. And in Barron's, there's a chart of all the leading economic indicators. And I was going to try to get that on here, but what I did was I just put a few of the facts. Now what this is what the changes have been year over year in some of the economic indicators. So this shows, people say, oh, I don't know, the economy still stinks, I don't know, you know, jobs aren't that great, everybody's poor, you know, it's still bad, especially if you listen to the political debates. We're all going down the tubes, nothing's good, it's gotten worse and worse and worse, and it's getting, you know, you've heard it. So here are some facts, came right out of that paper. You can have a look at it if you like. These are the changes year over year. So in 2011, we had a growth of our gross domestic product, everything put together, of 2.3%. So it was growing at 2.3%. As of February 2012, it's growing at 3%. Now you go, oh, that's, you know, that's 0.7%. How much does that represent in dollars? Well, that's a 30% difference in the amount of growth that's occurring. That's a big difference. Industrial output. Now that's a ratio, but in 2011 it was at 92.8, 2012 96.2. Personal income. 2011, 12.9. 2012, 13.2. So people are making more money than they were last year. Not by a huge amount, but they're making more money. Autos sold. The auto industry is booming. 158,000 last year, 190,000 this year. Retail sales, 383 last year, 408 this year. Exports, big change for the U.S. 1717, that's probably, trillion. I'm not sure. 1804 in 2012. So you can see, if you will look at these, this whole list, all of them are up. Everything's up. We have a healthy economy that is growing. Not fast, but at a reasonable, moderate pace. And everything is growing. That is good for the stock market. When the economy grows, the stock market grows. The stock market is a reflection of the economy. It's a bunch of companies. Our economy is made up of companies. When we buy a stock, we're becoming an owner of that company, and we own the company. We know exactly what we have. We know who the boss of the company is, us. We know how much it pays, what it's making, and exactly what we have. Here's some trends. I just talked about this trend. Whenever we look at the market, it's a moving thing. We want to figure out what's going to happen. And as I said, the market acts 6 months ahead of what's really going on. So the market is really looking 6 months ahead and saying, okay, I'm going to go up today because we think 6 months from now things are going to be better. It always acts ahead. One of the big trends that's occurring is what I just said, the international economy. The world, there are more players in the game. There's more money in the game. The more money and more players you have in the game, the more exciting it is. The faster things go. The faster money flows. And as money flows, people make profits. So the growth of the international economy is the single most important thing that's happening right now